All right. Good afternoon, everyone. This is Henry Gambell with Simpler Trading. We're getting the state of the market for Monday, December 21st, 2020 kicked off. I'll kind of start things here at a slower pace, let people file in here at the top of the hour, and then once I can confirm that we're good to go there, we'll kind of go through a few charts. So I always appreciate the opportunity to do these reviews with you. I don't remember exactly when I did the last one, but I covered similar thinking, or just the theme that, when we have these sessions, I can focus on a little bit bigger picture outlook and swing trades that will last, somewhere between 6 to 8 weeks. And that has really been working well for us in the recent market. So we'll have some of that to review. We have some of the current environment, of course, and then depending on how the half of the hour goes, we'll see if we can get into some questions towards the end of it. So as we get things kicked off, the first chart that we have to look at is a chart of the dollar index. So when you look at equities and you see this, steady continuous rise on what seems like every single day, a big part of that is because of the weakness in the dollar. So one thing that I always think about with currencies is that they tend to trend very well. So with that in mind, I think we have to look for the dollar eventually coming down here and taking out these 2018 lows. You can see that a quick retracement of it points out that low at 88.20. You break that on the back of a weekly squeeze, and I think that is about the perfect signal to see continued weakness in this. Obviously it feels like that has been the mission for some time now, and I just don't really see any reason for that to be backing off. So as part of what I'm using here, you can see the squeeze that is fired short. That is the same signal that I'm referencing right here, give or take. It's just the idea that after a period of consolidation, the trend should continue lower. That effect should be seen eventually in gold. Now, I haven't been doing a lot with the gold market here lately because I feel like the big psychological value of 2000 has to provide some degree of resistance. So you can see we had kind of the big panicked move off of this, also on the back of a daily squeeze, but you make that shove up into 2089, and now 2000 should remain a big psychological area of resistance for some time. One thing that I enjoy sharing, if you're kind of new to the analysis that I enjoy running in the markets, you might look at the daily chart of gold and say, well, here's the descending trend, and I think that's probably one thing that a lot of traders would have you look at, and with good reason. But one thing that I enjoy doing is coming in, and you can see it more plainly if you hide your studies and just think about the rallies that gold has seen inside this otherwise bearish trend. Now, if we go back and look at gold on a monthly, it's very bullish, and I think will continue to be. But if you can think about this as being the current downtrend, and you see it also in the trend line, but instead of comparing just the trend, inside this move, think about the rallies that you have seen previously. So here was a very significant move from swing low to swing high. You can see another one kind of right through here, swing low to swing high. And I like coming in and addressing these moves because trend lines can have, sometimes a little bit of a breakout, can be somewhat subjective. Do you see already how even just comparing that first swing somewhat mirrors the move that we've gone through now? I would take this second move and also line it up with it. And that level has been cleared, so it's a step in the right direction, but I give this to you to help you think about when this move will finally qualify for a bigger shift in trend. The clearing and the trend line may end up coinciding depending on when it happens, but once you can get that break, then the thing you want to look at next, if you are focused on the gold market, is going to be the major, I always refer to these as belly button levels, because if you were to take the average human, it's the idea that from head to toe, and we're going to use swing high as being the head, and then the swing low as being the toe, the idea would be that that 618 retracement is about where you'd find the belly button. So if we can clear this, and isn't it fascinating to see that that 618 retracement of 1966 perfectly coincides with this previous swing high? So there's a couple of ways of doing it. If you just want to buy some bullion or some collector's kinds of coins, I think that those will really be a good investment to be making here at the end of 2020, and then hold on to them for 3 to 5 to 10 years could make a really great investment. If you're looking for the shorter term opportunity, look for the symmetry to be cleared. Look for a close above the 618 retracement, and then at that moment, I think you can time your entry a little bit better that should see gold move up into 2162. So that covers a couple of the, you know, themes that I like to use in my trading as far as the symmetry and just analyzing a market. I'll also look at Bitcoin with you because as you think about the dollar continuing to decay, what are other places that you can put those assets that they'll continue to hopefully perform better. Now, I know that when you review something like Bitcoin, it's not easy to tell you to buy this lifetime high, and I'm not necessarily telling you to. I do think the lows back here at about 17,600 should be secure. Now, while that's obviously a very wide margin, I also think that it may be a helpful signal as you get into the next year. If there were anything to recap off of Bitcoin, it would be primarily, or I think just at least a very important signal, here with the 3-day squeeze. In the last broadcast that we did, and here in the Facebook Live, we spent a little bit of time on the 3-day squeeze, and we'll do it again today. But you can see that that was the primary signal that really gave Bitcoin this big shove higher. So, if you see any kind of a pullback, that would be better for your entry. I'm still, definitely long and will continue to play this market to the long side for the foreseeable future. Getting back a little bit more into some equity picks and things that may be a little bit more geared towards those of you that are joining us here on the Facebook and also YouTube Live for the stream. But I think all of us, are either trading stocks or options in one way or another. And one name that I think is just really coiled and just waiting to really pop higher is Nvidia. So I like chart patterns, and I'll expand this so we can kind of focus on one thing. The quick recap of the discussion we had last time was that, a lot of analysts will be very familiar with analyzing weekly charts or very familiar with analyzing daily charts. Those time frames are pretty common reference points, but not so often do you hear the 3-day chart. And I've done this to where you have the 4-day and the 2-day as well, which can also provide excellent signals, but with the theme of trying to think about names that are going to get moving for you in the next 6 to 8 weeks. I think that the 3-day is a perfect time frame. Not to just show you all old examples, but let's also do Tesla real quick, where you can just see the same thing. I enjoy showing you examples of these, so if you need to go back and study past instances of them, you have the opportunity to do that, and then compare it to the ones that are in the current, the market that we're evaluating right now. But you see during that period of consolidation that is defined by these red and then white dots, that's what I'm looking for as a signal. And as you learn trading from anyone, I think it's helpful for me too to step back and say, well, what does that mean? What are the dots actually signifying? And it's one of my favorites to discuss because it's very basic in the fact that it's just compression. Even if I wasn't studying the squeeze, I think you would have you'd have a lot of analysts that would come in and say, hey, this is a flag pattern where the trend that led me here was quite bullish, and then we've moved into this period of compression. When we get a breakout of this flag pattern, you should see some type of a measured move or a 1272 extension or something of that nature. All that's doing is putting that emotion, that technical signal into these dots, and it'll show up in a lot of different instances. You won't always have that clean of a chart pattern, but if you can see the Tesla 3-day, can you step over into Nvidia and see something that is similar? Right? I mean, if you didn't know better, I don't know, I just feel like it does have a striking comparison. So if you wanted to look at it from that point of view of finding the flag, you would have a very clear, the 589 high, and then kind of move this down, and then also a pattern right here. Now, I am not real strict with my patterns because I try to look at them from that 40,000 foot view, really stepping back and seeing what the signal is trying to tell me. And what I think we're getting ready to see is a move. If we run symmetry, if we compare and say, what was this decline in a point value, and you compare it to this decline, well, they're not exactly the same. And, as I learned symmetry, there was always this desire for perfection, which I will agree is always great. But the way that I like thinking is that if this type of a decline was, followed by this type of a rally, what's to say that this type of a decline, right, quite similar to what you saw back here, is not leading up to another move of the same magnitude? So if you can see that, you can really make some sharp projections way out into the future. And I'm not trying to tell you that you gear up for Nvidia and it's going to this target tomorrow, but I like this way of thinking, where that swing low to this swing high, if projected from these swing lows, basically if it were to repeat this type of pattern over, you're going to see a NVIDIA at 876. And I know this may seem kind of like a wild thing to call for, but one, give me time, right? This is a far out projection. And two, do you think like that was a wild move too, but it happened all the same? So I think those are fascinating charts to study. NVIDIA is one of my top picks that I would have you carry forward. If you can see that concept of symmetry and kind of using those moves out in price, well, then we can do another example in Peloton. And Peloton was a name that I brought to you in our last Facebook Live, and it continues to do exceptionally well. This shows up maybe a little bit more on the daily charts, which in this case I also want to show you the fascinating confluence with the Voodoo Lines. I'm sure you guys have seen David Starr in these broadcasts, and he's one of my favorite analysts, and I'm very fortunate to learn from and work with him. But when you see that fire line up there at 153.17, it makes it a very interesting target to me, just because of the merit of the fire lines. But then if you look at it, and you also compare kind of more of the same, which you can see you had a squeeze back in here, and then the resulting move, I just want to see what that was like from a price point perspective. Well, that swing low to this swing high was a given number of dollars. If you take that exact same movement in dollars and project it from this low, do you see how that target perfectly coincides with the fire line? I guess they're a couple pennies away from each other, but with this type of work, you can make a lot of good money by being just a little bit less than perfect. But I really like looking at that symmetry projection up into the fire line, and then one last thing that complements it. You can right click here on your Fibonacci work to activate the drawing, and when the drawing is activated you can see the swing low and swing high that I'm referencing for this work. So if we take this as the 100 point decline, or the 100, that's 100% of the decline, and then you're looking for the 1272 of that move, so 27.2% above this swing high. Look at how all three of those values have such a perfect confluence. So we've been in Peloton since that last call that we had, and these are the targets that I'm looking for. I don't think that Peloton stops there. I think it will be due for a breather, but then at that time look for a pullback to the breakout. So if you pull back right into here, on that move, I think that would be a gift to buy. If it gets a little bit deeper, down into 133, it should also offer some really great support. So I kind of segued over into that just because of the comparison and symmetry, and that being one of my favorite things to run. Let's also make sure I get a few of my favorites in here. Oh, the video is blocking the squeeze. I'll try to make sure that that is corrected. I can see what you're pointing to. Most of them should be coming through. Like I know right now on NVTA we can still see this signal. But I show this one to you because I think the volume that has come in over the past 3 days is significant. And if you take the concept of symmetry, where we're looking at this like an artist and not so much like a scientist, because if you're doing it like a scientist or you're wanting absolute precision, well then you're going to look at this and say, I would really like to buy at 44.63, because if we're using 44.63, that is just comparing the current decline to the decline that came through here. And it's similar ways of thinking that you're analyzing a trend first by recognizing a pattern of higher highs and higher lows. It's one of the most fundamental things, right? And very basic to think of from a trend following, and like as we work to study patterns, what are we looking for? Well, that's a very basic one. Then you're just comparing the swings to think if that's what it's done before, well then it's just moving through a similar correction now. And also one of my favorites here, and let's flip back to the 3-day. But you've got this signal that should give you a tradable move for about the next 6 to 8 weeks, if not longer. So the concept that I work with these is that while the squeeze is in play, you work on accumulating your position at the 21 EMA while you wait for the signal to resolve. Now, I study these patterns and setups, and I do not use stops, because one of the biggest things for me in the market, John will tell this story from one of his mentors, that he would see, I believe it was she actually, but would see so many traders that would trade too big with too tight of stops. So instead, I trade a little bit smaller and don't use a stop. And I think that you also have the luxury of doing that in the options market, right? If you're trading stocks or futures, then that's an entirely different endeavor. But I encourage you to think about this, because I find a lot of people too, the market might have situations that will give you more than what you would have taken if you were managing it very tight. I'm giving this to you to think about going out in NVTA and buying something about 90 days out, and don't look at it with a really strict target. Look at it and say, whatever I put to work from the monetary perspective, that money is gone. And then I'm going to check on that option in about 3 weeks just to see where it's at. And I think you may find yourself, a lot of times you can just get more out of it than you would have otherwise. So with that being the kind of back of my thinking, look at this 3-day squeeze in NVTA. Right, I'm going to try to highlight from where the signal is beginning. This is showing up good, right? Just focus on the annotations right here, and I'll make sure that they do show up cleanly as we talk about it. But this is where you see the signal develop. So all throughout this period, we're building up our position, right? And then when it fires, ideally we are in that. So then we see it repeat. We go on right here. You can see where I highlight just beginning the first part of the squeeze and then moving until the momentum shifts. Once the momentum shifts, then that may be a big part of the move that is over. But do you see this nice leg higher in NVTA? I feel like you have something that is setting up, getting ready to do the exact same thing again. If we carry this concept forward, and again say, as you think about symmetry as a projection, we would use this swing high to this swing low. That swing was driven by this 3-day squeeze. Well, now we have a 3-day squeeze. Why not take that same concept and say swing low to swing high? If we move that out forward in time, 6460 I think is a modest target, but as you just run this over and over, you'll find more interesting confluences, and I think using them in conjunction with the squeeze can provide for very good directional moves, and I would have you definitely spend some time on this. One strategy that I've been looking at is that coming into NVTA and just selling some naked puts in this. If you've never done a naked put, I bring this one to you to consider because it's a relatively inexpensive product, right? I'm not telling you to sell puts in Amazon, which is quite a bit more expensive, but you're doing it in something where 25 days out is kind of a sweet spot. Some may prefer it longer or shorter. This could be argued forever, but I think if you can sell the $50 puts, those are going for $4.50, then that gives you a break even on your entry stock price at $45.50. So there's a lot of different ways to make money with this one. If you have an account to buy and hold the shares, then do that. Otherwise, if you would like to look at selling those puts, I think that'll be a good trade for January and then also potentially a little bit further out. And those of you that have been in the chat room with me, I'm sure are no stranger to this one. I think we looked at it last time we had a talk as well. But Pinterest, and this one has just been so tight as far as the consolidation is concerned here. I've got a lot of different levels that I've been updating, basically based off of that intraday symmetry, but especially if you have not been involved with Pinterest, I think this is an excellent time to be looking at it. It follows a very basic principle that while there's a lot of different moving parts on the chart and things that I enjoy analyzing because I spend a lot of time with this, but if you want a very basic approach, we're just doing the same thing. We're taking this daily squeeze. You can see that right now the momentum of this daily squeeze is moving lower. So you see where the signal begins compressing, and all throughout this the momentum has been rolling lower. So if you look at it and say, well, would that be something that would fire short? Remember that we want to acknowledge the overall prevailing trend first. So when you sit back and look at Pinterest, this is a very easy one to have this conversation on with you because it's going basically straight up. So I'm going to look at these periods of consolidation as beneficial and something that will help the next leg higher. No different than what you saw back here. You see this long phase of compression that then develops the squeeze. When that signal finally fires, we have an excellent base to move from, and we take it from 35 up into 50. Now, I feel like we're just going through something similar, where this is your next phase of compression, and I'm not selling a penny of this until we get to 77. Now, when I say that, I try to be mindful of my risk, and while I'm not using stops on this, I don't really want to see it below this. We've got it right there about 66 and change. That was kind of an important low. You saw it bought up very swiftly. I would like to see that hangs in there, but as long as you can trade sideways, continue to consolidate, look for better moves in this name over the course of the next couple of weeks, and especially as you think about 6 to 8 week swing trades, I think that one to 77 really has some excellent opportunity. Awesome. Yeah, and thank you for answering those questions, Paul. If you are studying the squeeze, there are various phases of compression. The standard one is the one that I grew up with. And if you're looking for indicators that are already licensed into Thinkorswim, this is where a lot of people will start because it is built in. It can still give you excellent signals, but once you've spent time with it, I think it's good to kind of move into the next phase of understanding it. That's also if you really like the squeeze, which I am a devoted follower of. When we were looking at NVTA, the comment of being above 50, because I like that how the human mind works, right? I think you're going to see that you defend the psychological value of 50. It could chop there, it could take a while before it advances, which is what makes the short premium so nice. But if you're willing to agree with, or you like the idea of thinking about that nice round number of 50, you can also put DraftKings into your list. Now, as we cover, and especially if you want to do this one fresh here just real quick, let's look at a daily chart without any other indicators on it and cover it from this very basic concept. Because we've got a product that has made this lifetime high back there not that long ago at 64.19. And if we're looking at it with just fresh eyes, and we're saying the only reason that we are wanting to pursue this, or why it comes up on my list and why I'm focusing on it with you right now, is because of this daily squeeze. You can see that today was actually the first day where momentum shifted back lower. I don't think that really changes the signal, because what I'm going to look at first and foremost is where are we at in relationship to that belly button level, to the retracement of the bigger selling, right? This is important because if sellers were more in control, this was a big draft lower. And if sellers were in control, you would expect to find resistance at that 618 retracement and then look for the trend to head back down lower. But if you clear that level and you get a strong close above it, that begins to open up the door to the 1272 extension. So you can see how this is an inflection point back in here, right? We make the low, rally up into this level that I'm speaking with right now to you about, and then fail from it. Then we come to it right here and fail from it. So you can see that I am not the only person studying these levels, but now we're kind of climbing up through it. And I just think it's another example of where the short 50 put is a great place to be looking for to bring in some premium. If you can buy the shares, if you can buy the calls, this is also great, and it's also a good place to stagger your strategies. One of my favorite things in options trading is to think about selling the short dated premium and then buying the longer dated premium. That is to say that in the January monthlies, you're focusing on selling puts or selling a put spread, and then you're coming out into these Februaries and buying those. This actually, as I evaluate it with you, continues to look like a really good trade if you do in fact have earnings that are due out within this expiration, because what you'll see is that the options continue to rise because of the increasing implied volatility. There again, you want to make sure that that report is out before the 60-day expiration, but I just think that's a perfect place to sell the $50 puts, buy something like, maybe the Delta 60s. That's where I would probably end up focusing my efforts, but I think DraftKings is another good pick that you add that into your little watch list. If you're taking notes, add it to your notepad, and I think that the next time we're having this conversation, you'll find DraftKings at higher prices. Just a few more here. We looked at Apple in our last broadcast, and it's had some excellent results since then, and actually a really good recovery today as well. So if we look at this from that same very basic perspective, now we brought this one to you off of the 3-day. Let's do the same thing, clearing these old drawing levels, and just starting with a very basic premise that when I'm looking at these setups, right here is my 3-day squeeze, where the signal has officially begun to fire long, right? You can see that transition out of the standard phase of compression. And, since you asked the question, I do like to bring up this chart every now and then, which is the, affectionately referred to as the OG squeeze, the one I grew up on. We can come back and look at this off of something like a 3-day chart, and you can see more that it has actually been confirmed. So if you haven't set these up, you can go into your Thinkorswim time aggregations. For this discussion, let's just look at 5 years of 3-day data. And do you see how this signal has fired? So if you're studying it from, like I study from John, and where I'm just trying to get every bit of information I can to help give me a little bit more of an edge and a better understanding in what I'm doing, well then the Squeeze Pro is awesome. If you're new to this and you just like to use some signals that are built in, this is a licensed piece of Thinkorswim, and do you see where that signal is firing? So that's all you really have to know, is that this bar, and it actually should close this Thursday, right? We've got an abbreviated week. So when Thursday closes, you should see that this signal fires, and we say, okay, signal's fired. I've got a directional reason to pursue this to the long side. Then, as I want to think about targets, we just do the same thing where this retracement will show us our extensions as well. So swing high, down into swing low. Do you see the same repetition of pattern? Do you see the failure at the 618? You fail at the 618, but then do not make a new low, and now we are well above the 618. So you respect it as resistance when it is first tested, but then as it continues to chew through it, holding the moving averages on the pullback, that shows you that buyers are more persistent, and with the clearing of that major retracement level, you set up with what I think will be some really excellent targets, and those come in at 147.47 and then 152 after that. So that, even though Apple is something sometimes I think you're better served by holding rather than necessarily trading, if you begin by having this backdrop, I think it will serve you well. There will be corrections, but even the correction we saw this morning, if you can stick with that plan of managing, letting it continue to trade as long as you're closing above the 21 EMA, then you have to kind of hold tight on mornings like this. But then at the end of the session, when Apple is up 1.2%, you feel kind of rewarded for that. Let me get in a couple more for you. You guys probably, I know at least one of you have probably used DocuSign while you've been at home or wherever the recent circumstances have been, have left you. But this is another one that just follows the exact same pattern. So we can do this from, I like doing these sessions with the most basic thing I can bring you. So the 3-day squeeze is that foundation. It's, kind of a unique time frame, but that's what we're really focused on. Then we're looking at this saying from a major swing high. I love these two because they're so easy to identify, right? That 290 spike high, everyone is going to see that. It's a very obvious level to run your analysis from. So therefore, it should be hopefully better. But if we use that as our high, and then you can also see the little bit of a double bottom here off of the low. Not perfect, but close enough for what we're doing. So I'm just going to call that support at 187. And then where is that retracement? We are right there against it. So as you take this work home with you, I'll say again that I'm not going to guarantee that this is up tomorrow or, the exact pattern that it takes there, but I begin my analysis by knowing that this will be an important area of resistance. And as it starts to get above it, that helps confirm that this signal will fire long. And then you're going to have targets up there at 318 and above that, eventually 333 and 355. So take DocuSign with you as another name that I think will be a good trade over the next 6 to 8 weeks, potentially a little bit longer, and hopefully you find that a helpful part of today's broadcast. What do you think of Pepsi? Peloton up to 156? Man. I would have seen that if I was looking at the current bid, but you are exactly right. Well, that'll look good tomorrow. So you also want to look at Pepsi. I know that Pepsi is quite bullish. Check out the work that I already had on here for you. Really basic, but part of what I enjoy so much about trading is that you can do it with just horizontal levels sometimes. But you can see the lifetime high at 147.20. And you can see how the past several weeks have just been so tight against this. So I would take the 3-day and then also compare the weekly and the daily. Right? Daily kind of sloppy. But if you step back to the weekly, there's only one way to trade this, and that direction is higher. Once you have confirmed the direction that you're wanting to trade it, well, then the only other aspect is timing. And this is also why I feel if you'll give yourself the gift of time, go further out with your options than you think you might have to. Maybe try to structure them in a theta positive way, depending on how you feel about that. But that looks wonderful. Pepsi should head up into 159, then 166, and 175 is the way that I work to look at those projections. There would be no difference in me doing the analysis for you in Pepsi back here. Because do you see how that weekly squeeze, I'm on the monthly, But it carries the exact same concept. You just have to be a little more patient. But do you see how this signal fired long, and then you come to take out this high on a move into extensions? That's what we're working on mastering, right? That's where we want to be involved. And right now, you're in about, like, I'll circle this for you. This is where you are right now, right? This was that moment in time previously because you were right up against that high and you wanted to catch that breakout. Well, now you're right there, right? Right up against the old high, trying to catch the breakout, and I don't see any reason for it to not happen. And thank you, Paul. Mandy and I both appreciate that very much. Fortunate to get to share the afternoon with you guys. I hope you found the session helpful. And then with a 3-day chart, how far will you go out for a call? I like 90 to 100 days. 100 days is the metric that I grew up on. If you remember when John did his elephant course, that was a focus on buying companies that have a little bit, they're kind of smaller cap and they have good growth potential. And that metric was usually about 100 days out. So that's where I work. If you only have 120, like say you have 120 or 90, go with the 120 and give yourself that gift of time. That helps you be a little bit less anxious about it. And I think it'll really help enhance your returns. So, thank you guys so much for being here this afternoon. I hope to see you in the chat room. I won't be in there tomorrow morning, but I will be in there Wednesday. Oh, and let's just do one more. I know I'm a little over time, but I think it's appropriate that if you're joining me for this broadcast, that we also look at the Facebook 3-day squeeze. This is another one that if you can give it enough time, I really don't see any reason why Facebook won't be moving into higher prices. The main signal that I'm focused on probably should be the weekly. And, once it can get above 300, it'll probably be a little bit easier to trade. I don't have any positions on Facebook right now, but I just think that you do keep this in the back of your mind. One of these days you're going to see that Facebook is holding the baton, helping the indexes march higher, and just thought I'd throw that in there at the end. So you guys have a great rest of your Monday. Like I said, I hope to see you in the chat room. Otherwise, have a very Merry Christmas, a wonderful New Year, and we'll see you at the next State of the Market.